Prime Minister Anthony Albanese joins world leaders at the G20 where the war in Ukraine, climate change and trade deals top the agenda. National Australia Bank sues budgeting app YNAB budget. And there's a glimmer of hope in China where they've managed to squeeze out of deflation. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Monday, the 11th of September, 2023. I'm Michael Thompson, and with Sean Aylmer still away, I'm joined instead by Jennifer Duke. Jen, good morning.
Good morning, Michael.
Now, after the show, you have an interview coming up, a great one for investors. You're speaking with Sam Koch, a senior investment analyst at Wilson Asset Management.
Yeah, we were talking all about reporting season, and he's got a focus on small cap stocks. So we were thinking about the trends and companies that people need to know about, including why New Zealand is so interesting for investors right now.
Yeah, I don't think I've heard a guest name as many companies as Sam did. It is just go through and you just kind of take notes as you go. And we're not an investing podcast, and you should seek professional advice before making investment decisions. But it's interesting listening to someone like Sam. It's just a few ideas and things to research and things to talk to people about. So it's well worth a listen. It's coming up a bit later on. The main story this morning, though, Jen, is a pretty big one. Prime Minister Anthony Albanese has joined a raft of other G20 leaders. I've never considered a group of leaders as a raft before, but I suppose
a lifeboat
of G20 leaders in a declaration that criticises the economic and humanitarian consequences of the invasion of Ukraine. But it still includes a carve-out for Russia and its supporters.
Yeah, so firstly, the declaration that reaffirms that the G20 is the premier forum for international economic cooperation, but it recognises that it's not the place to resolve geopolitical and security issues. So instead, what they've done is acknowledge the consequences that the Russia-Ukraine situation has on the global economy. Now, it does list human suffering as a major negative impact, obviously, from the war, but economically, it's noting that impacts on global food and energy security, supply chain problems, macro-financial stability, inflation, and just general impacts on growth are among the concerns. And it calls on Russia to allow grain and fertilizer to be exported.
Now, speaking of Russia, we've talked about this on Fear and Greed before. Chinese President Xi Jinping and Russia's President Vladimir Putin both sent other representatives in their stead to the G20 meeting in New Delhi. That's considered a major snub, isn't it?
Yeah, it is a major snub. And the declaration actually allows Russia and China to disagree. So the Ukrainian government is pretty dismissive of the statement and criticised it for not mentioning Russia explicitly. And it's important to remember that this is a declaration, not a more significant communique. So there is a little bit of a breakdown in relationships there.
Yeah, sounds like it. What did the Prime Minister, Anthony Albanese, say about the statement?
So Albanese delivered a statement to the G20 where he said the past 12 months have been pretty difficult. And he said this had been made all the more challenging, that's a quote, by Russia's invasion of Ukraine. Now, Albanese actually criticised Russia's illegal invasion and sees the statement as forceful in the context of the circumstances. He said that Russia has to have gotten the message now that its war was having a devastating impact on the world, inflation and global economies.
Now, in your day job, of course, you are the economics correspondent for Capital Brief. So I suppose you'd be keeping a rather close eye on the economic significance of a meeting like the G20. Were there any other kind of substantial issues in that space that the Prime Minister spoke about?
Yeah, absolutely. So the other significant issue that Albanese focused on, which obviously continues to be the cause of disagreement among some G20 nations, was climate change, the biggie. So he said the world has endured another year of extreme weather impacts. The climate's already been changing and there must be a net zero future. And he emphasised the role that Australia plays as an exporter of critical minerals, which are used for renewable technologies. Now, the declaration that was signed by the G20 leaders aims to encourage efforts to triple renewable energy capacity globally, but it hasn't got a shared deadline to phase out fossil fuels yet.
Were there any high-level meetings between Albo and world leaders? That's always the kind of it's like the gossip column side of the G20.
Look at the G20, all the meetings are high level, don't you think?
Yeah, I know, but I just like to see who the Prime Minister gets to meet with, because it's kind of like it tells you a lot about where Australia fits into the big picture.
Oh, absolutely. So, look, Albanese did have some other high-profile meetings. So he was discussing free trade negotiations with French President Emmanuel Macron, and he had a meeting with the European Union Commissioner over the weekend. So he's hoping to see an Australia-EU free trade agreement done and dusted as soon as possible, with high chances that this will be in this year rather than next year.
All right, a fairly significant few days by the sounds of it. Now, local markets, how did they wrap up last week?
So the S&P ASX 200 closed down just slightly, falling 0.2% to 7157 points. That was closing out a pretty shaky trading week, down 1.7% overall. So it was really patchy in terms of sectors. Metals and mining and materials led the falls. Iron ore prices hit the miners, with BHP, Fortescue Metals and Rio Tinto all dropping, and utilities and healthcare were the top performing sectors, led by the best performer, which is medical device company PolyNovo, up 3.1%. Mineral resources was the worst performer over the day, down 3.8% on Friday. It was trading ex-dividend, and Aurora continued its falls, down 3.2%.
Okay, international markets, what's going on there?
So last week ended up being a really interesting one for global equities markets. It was red ink across the Asia Pacific. So the Hang Seng was down 2.1% and the Shanghai Composite Index was down 0.9%. Euro Stoxx 50 was down 1.2% over the week, but had a 0.4% bump on the final trading day. And the FTSE 100 was up 0.2% over the week. The Dow Jones fell 0.9% and the Nasdaq was down 2.6%. And in terms of commodities, iron ore, coal, copper and wheat all declined, while oil and gold were up. And the Aussie dollar starts the week just under 64 US cents.
All right, we have a very big show coming up. We've got plenty to cover to kick off the week. We'll be back in a moment with the rest of the day's business news. Now, Jen, how to physically write your vote in the Voice referendum is now part of a federal court stoush. Queensland mining billionaire Clive Palmer and United Australia Party Senator Ralph Babbitt want crosses on ballot papers to be considered a vote against the Voice.
So we're 5 weeks out from the vote, which is October 14, and this will need to get through court pretty quickly. So there's going to be a hearing on September 20 about this. Now, right now, the Electoral Commission says that if you tick in the box, it's counted as a yes. But if you cross, which can be a bit ambiguous, it won't be counted as a no. This isn't new to the Voice. I've got to say that. This is every single referendum. But we have seen some people, including Peter Dutton, raise concerns that this advantages the Yes campaign. Dutton is opposed to the Voice in its current form.
Yeah, we did see the Electoral Commission come out and explain this a little while ago, just pointing out the fact that this is consistent across every referendum, and it is the way that it actually goes. But it just shows the amount of kind of education and also how political this gets, when even how the paper is filled out is subject to a political and now legal stoush.
Yeah, there's a lot of scrutiny on this. The AEC did say that it's one of those beautiful things about our system is that you can take it to court, that anyone can do that, and that they think it actually upholds the nature of referendums. So, there are positives as well, I suppose, in there.
Now, this next story, Jen, I find this fascinating. One of our big four banks, National Australia Bank, is suing US-based budgeting service You Need a Budget. Now, the thing about this is, this story is really all about the acronyms, isn't it?
That's right. So NAB reckons that you need a budget. You need to remember the YNAB there if you need a budget and put that into acronyms. So NAB thinks they've been infringing on their trademark. So apparently NAB's been asking the budgeters to rebrand. So You Need a Budget is a wildly popular app, and it uses a digital version of the envelope method for budgeting. And when you download the app, it's under the acronym YNAB. But NAB doesn't like it because they think they're deceptively similar to its own brand, and customers might think that they're connected services. And federal court filings by NAB actually reckon that some people might call it YNAB out loud. NAB sent letters asking You Need a Budget to change its branding.
Look, all this talk about budgeting, I've got to put in a quick plug for our sister podcast, How Do They Afford That? Because one of the things that Canna Campbell, who is the founder of Sugar Mama TV, the financial literacy platform, and I talk about a lot is about budgeting systems and all the various budgeting methods and the importance of having a good budget, and the fact that often you don't really need a fancy app or anything to do it. You can just do it using either a piece of paper or a spreadsheet or something like that. But we've done some great episodes. Look, self-declared great episodes. Feels like I'm a little bit biased on that one. But if you're interested in budgeting, it is well worth going and having a listen to How Do They Afford That? On with the show, Jen. Auction clearance rates seem to have remained pretty steady at one of the biggest weekends under the hammer this year so far.
Yeah, so there are about 2,285 auctions that were expected to be held over the weekend. That's on CoreLogic's figures, and that's about the same as last weekend. And so the spring selling season is really kicking off pretty strongly. Last year, there were about 1,918 auctions for the equivalent weekend. So there's a bit more life in the market at the moment. On preliminary auction clearance rate numbers, we're at 71.7%. So that's so far surpassing the clearance rate of last weekend, but only by a little bit. So Sydney's clearance rate on these early figures shares is at 73.4%, with Melbourne at 71.5%. And we'll get an even clearer picture when more results are collected, but it looks like a really solid weekend for sellers.
Now, another one from politics. Jen, Barnaby Joyce has tried and failed to get the Nationals to abolish its policy of reaching net zero by 2050.
So the Nationals had a federal conference on Saturday in Canberra, and it was attended by more than 100 party delegates. And Joyce was there attempting to abolish the net zero position. So he wanted it replaced with policy wording that would reduce Australia's CO2 emissions, quote, in collaboration with the rest of the world. And The Age is reporting that National Senator Matt Canavan backed Joyce, but other delegates said it would undermine the coalition's nuclear energy push and ruin future election hopes. Instead, the Nationals have worked on a practical approach to lowering carbon emissions while there is a shift in nuclear power. And Nationals leader David Littleproud said he had no plans to abandon net zero unless there's an alternative.
On the topic of carbon emissions, Jen, former competition watchdog chair Rod Sims, who is also chair of the Superpower Institute, has laid out the steps that Australia needs to take to help with global decarbonisation.
I love the name, the Superpower Institute.
It's a great institute. Now, if you're going to have an institute, you've got to give it a name. Like it feels like something that you would find in James Bond, don't you reckon?
Or like X-Men or something.
Yes, the Superpower.
Rod Sims heading up the X-Men. I love it.
Oh, that's great.
Well, look, Sims, far from it being about actual sort of X-Men superpowers, it's much more about us being a renewable superpower. So Sims wrote an opinion piece for the Financial Review in which he looks at the issue from an economic perspective, including Australia's comparative advantage in producing green iron and aluminium and making other in-demand renewable products. So he sees Australia as playing a major role in helping reduce world emissions by an additional 6 to 9%, as well as our own 1.3% contribution.
So how? How do we do this? What are the areas that he thinks we should be focusing on?
It's a multi-billion-dollar question, I think. But firstly, he thinks we need to upskill Australians. So that includes training more geologists, chemical engineers, and tradies like people who are electricians and things like that. Then he wants regulatory approvals for new mines to be made more efficient. He wants infrastructure policies to be re-examined, particularly around hydrogen storage and transmission into industrial hubs. And he wants Australia to commit publicly and in practice to open trade. So that means being willing to sell to those who offer us good prices for green products. And he says we need to review our tax and expenditure policies.
Now, one last one before we get to international news. A new report has put extra scrutiny on board directors, in particular, their independence and investments in the businesses they sit on boards for.
Yeah, this is a really interesting one. So Governance Firm Ownership Matters has looked at a range of factors affecting directors on the top few hundred businesses on the ASX. And the report found that boards are increasingly independent, now accounting for more than 93% of directors in the ASX 100 and more than 82% of those of the other 200 on the ASX. But according to the AFR, the report also found that there was an underwhelming degree of skin in the game. And that's when looking at directors' personal shareholdings. So in the ASX 100, less than half had personal shareholdings equivalent to a year's worth of their board fees, and 50 directors from the ASX 100 and 72 from ASX 200 companies didn't own one single share in the business they sat on the board of. I find that really interesting.
Yeah, that is fascinating. It's just that whole concept of having skin in the game, isn't it?
Definitely.
That's a bit of an eye-opener, actually. Now, international news, some really awful news here, Jen. This story has come out of Morocco over the weekend. An incredibly rare and deadly earthquake has killed more than 2,000 people.
Yeah, it's a really horrific situation in Morocco. So it was a 6.8 quake that hit them over the weekend. That's the worst in over 120 years, and it left villages cut off from one another without electricity and phone services. And I'm assuming most people have probably seen the photos and the footage of what we've seen from Morocco at the moment on the ground, and it's really quite horrifying. So there's at least 2,000 or so more who are also injured on top of that fatality number, of which about 1,400 are in critical condition. And world leaders who were in India on the weekend, in particular for the G20, have offered to send aid and rescue crews, and Australia was among those.
All right, now Facebook, Elon Musk's X, formerly Twitter, and other social media giants are due to see their moderation practices dragged into a showdown in the Supreme Court in the US.
Yeah, so a US federal court has found that the Biden administration, the FBI, and other agencies were unconstitutional in their efforts to have posts stripped off of major digital platforms. And these were things related to the COVID-19 pandemic, the 2020 election result, and other hot-button issues like the Hunter Biden laptop scandal. And health academics took the First Amendment case to court last year, arguing that their rights had been breached as the government was censoring their speech by putting pressure on third parties. So in this case, that's the social media giants. The court said that this was a rare and coordinated campaign from federal officials that had likely suppressed millions of protected free speech posts from US citizens by coercing the services, and that's by sending them urgent and uncompromising demands for moderation of content. And it issued an injunction to stop interference. It's likely the government will appeal this judgment, though.
Yeah, it doesn't sound like that story will be finishing anytime soon. Now, I mentioned this one at the top of the show, Jen. China narrowly squeezed out of deflation in August with new data showing some, I suppose you'd call them green shoots back in the economy.
So China's consumer prices index actually increased 0.1% in August year on year, and that pulled China out of deflation for the month following a 0.3% decline in prices in July. But it was lower than Reuters' poll of analysts were expecting. They were looking for a 0.2% increase. Now, the producer prices index fell 3% year on year, with the industrial sector continuing to drag, but at a lesser rate than in July. Beijing's trying desperately to stimulate demand in the economy, but so far there is still huge weakness, particularly in the property sector, which is about 25% of economic activity in China, and that's a major drag on the overall figures. Mortgage rates and loan requirements have been cut back to try and encourage buying activity, so it's a long way to go.
Now, Jen, we've saved a massive one to finish on today. The $50 billion flotation of British semiconductor and software design company ARM is more than 5 times oversubscribed.
It is a huge one. So this is one of the biggest IPOs on the NASDAQ in nearly 2 years. And the Financial Times is reporting that bankers have told them that investors are all over it, even despite concerns about a drop in profit for ARM's latest quarter. So the business is affected by a smartphone industry slowdown and weakness in China. But the FT says that brokers and ARM executives are convincing fund managers of its merits by telling them that the big AI trend will be everywhere and it's going to run on the company's tech. And they're saying the opportunity is boundless and computing needs are insatiable. SoftBank snapped up a 25% stake in ARM in August.
You'd have to, if you're a headline writer, you would have to love working with a company like ARM, wouldn't you? Because there's just so much opportunity. It's all about kind of like ARM's flex or something like that. I don't know.
There's some arms deals jokes in there.
Oh,
Arm to the teeth.
That is a great one. Yeah, that is much better than I came up with. Well played. Now, up next is the Fear and Greed Daily interview. You are speaking today with Sam Koch, a senior investment analyst at Wilson Asset Management.
Yeah, Sam got deep into those specific companies and trends that they noticed during reporting season, including the ins and outs of tech and AI, of course, as well as how consumer spending is affecting company performance.
Yeah, it's a really good chat. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Also worth checking out today is Fear and Greed the Week Ahead with our resident economist, Stephen Koukoulas, who looks at labour force data and everything coming up this week, but also has a very good chat about everything that unfolded last week, from the Reserve Bank meeting to the GDP data that came out as well. It was a massive week last week, and it's great to get the Kook's take on that. That one is in the Fear and Greed playlist as well. Thank you very much, Jen.
Thanks so much, Michael.
It is Monday, the 11th of September, 2023. Make sure you're following the podcast and please join us online on LinkedIn and Instagram and X and Facebook. I'm Michael Thompson and that was Fear and Greed Business News. Have a great day.